Well, back to our top story. The head of Saudi Arabia's central bank denied reports oil producers in the Gulf want to phase the dollar out of oil pricing. London's independent newspaper reported Arab states may switch to a basket of currencies for oil trading, and that secret talks have been held with China and Brazil. For more on what this means for the dollar, let's go to London and check in with Ashraf Laidi. He's chief market strategist at CMC Markets. Ashraf, thanks for joining us this morning. I wanted to start by asking whether you buy this idea, whether or not there indeed is this plan out there to dump the greenback.
It's not the first time that we hear about this idea. It's not the first time we hear about the Chinese element of the story, about the Chinese element basically thinking about the need to want to diversify their reserves outside U.S. treasuries. And from the Arab Gulf state element, this story that had been coming up every 6 or 9 months for the past 3 years, that they want to consider alternatives to the U.S. dollar and basically in their oil revenue. It did not make a big difference had you asked me this question 3 years ago, 4 years ago. However, today we are talking about interest rates in the United States are at 0%. The U.S. continues to print money. At the same time, like you've heard and like you told the viewers, Australia and surely enough the rest of the world is going to start to raise interest rates while the U.S. is going to be left behind.
Right.
So in probably, 6 to 12 months' time, such stories will do make a difference. And however, the currency reserve, the situation with the currency reserves right now, neither China nor the Arab states have a choice to diversify away from the dollar, but it could be a work in progress.
Well, let's talk a little bit more about that, how feasible this is. Obviously, this idea that you would have a basket of currencies, yen, yuan, euros, throw gold into the mix, a new standard currency for Arab nations. It's a lot of coordination, is it not?
Yes, well, the hard part is really the Chinese yuan story. Not only the Chinese have to stop intervening, they have to make their currency a little bit higher than what it is. And not only they have to make it convertible, and that's the key. Until then that would be more of a credible story. Will the European Central Bank want its currency to be part of the reserve component? Yes, they would like it, but they don't really want to lose control over the issuance of the euro. So right now we're talking about this, and it's 2009. I would say probably, in around 3 to 4 years' time, I do think that we're going to be moving towards a currency reserve setup where the U.S. dollar is not the only component, but it's definitely going to be also joined by the yen, by the euro, and some of the central banks will be holding more gold. That's the other story that the central banks are really considering for their armory.
Okay, Ashraf, we always appreciate your time.